Things are looking good for silver and gold. The October inflation report came out this morning, and oh man, did things go bonkers. Inflation is down. The stock market is up. Treasuries are down. Gold and silver spot up. Premiums up. And sales volume is moving higher. Could this be the inflection point to higher precious metal prices next year that we've been talking about for months? Is this the turning point that takes us to $30 silver in 2024? The short answer is, I think so, which is why I bought silver this morning. Let's get into it. Over on CNBC, inflation declined in October, largely due to a slowdown in gasoline prices and continued moderation in housing costs. According to an economist at Wells Fargo Economics, this disinflationary trend is in place. In October, the Consumer Price Index increased 3.2% from 12 months earlier, down from 3.7% in September. Guys, this is what we're looking for. Solid data that the Fed can act on, because we all know the Fed doesn't know what they're doing. Powell isn't leading. They're data dependent, as he keeps repeating. In contrast to Volcker, Powell doesn't say this is what we're going to do to get inflation under control. Here's how it's going to work, and here's what it'll look like on the other side. Instead, Powell says, we're going to look at the data and let that tell us what to do. Maybe we'll pause. Maybe we'll increase. We don't know until we look at the data. Well, the data is in, and here's what it says. Inflation is slowly but steadily moderating, and all the trend lines look good. It feels like by this time next year, inflation will be very close to the Federal Reserve's target and something the American consumer will feel comfortable with. The pause is locked in. Reaction. The Dow rallies 500 points. Gold is up nearly 1%, and silver moves higher by nearly 4%. Treasuries are down 171 basis points. Nobody wants them. I pulled my money out of T-bills last week. The premium is no longer high enough to reward me for the risk. That's right. We now have to look at treasuries as having risk. What used to be zero-risk investments are no longer infinitely safe. To geek out on math here a little, some measures of infinity are bigger than others. Treasury risk, that is risk of default or delayed or partial payment at maturity, is higher. Infinitely safe bonds aren't so safe anymore. The size of their infinity has gotten smaller, or maybe it's not even infinity anymore. The result is money rotates out of treasuries, and so it needs to find somewhere else to go. For a lot of investors, that's going to be precious metals. Price goes up. I've already reached my stacking goals for the year, but I just couldn't pass up an opportunity to stack a little more. How much silver is enough? The answer is always, just a little more. Slowly, silver purchase volume has been creeping up. It'll reach mid-August volume soon if it continues in this direction. I expect that after a few days, we'll see volume, spot price, and premiums all go up together. Already premiums are up. They've been trending up for a while. The silver I ordered this morning was priced at $1.69 over spot. The same silver from the same online dealer was $1.50 over spot the last time I bought it, which was when silver was $21 an ounce, back in early October. Stackers will be rewarded soon, and certainly, I think by mid-2024, we'll be in a much better place than we are now. Hold on to your silver and gold if you can. As always, stay safe out there, and we'll catch you next time.